What's up, guys? Welcome back to another episode of Rawstocks. This is Rustic, and today we're going to be taking a look at Tesla's chart. We're going to look at where price came from, where price ended today, and where price is likely to head tomorrow. We're heading into some key data days. We got CPI and PPI coming out pre-market on Tuesday and Wednesday, so certainly could be a market mover. Things we're going to be watching for pre-market to see how they affect the price. So we're going to start by looking at the daily chart on Tesla. We had a nice large open range Monday, some real serious price movement. Looks like the price of Tesla went up $9.06 or 4.22%. And ended up pretty close to the high of the day, not exactly. Now, market is kind of ripping in after hours on Robinhood, but I'm not sure, the validity of that, considering that we do have, CPI. Maybe some people trying to front run. Obviously, share traders trying to front run the report. But we could open up, tomorrow and see that the report came out bad, and all that could be erased very easily. Just as quick as we went up, $9 today, we could go back down $9. So not putting much weight in the Robinhood after hours traders. So we'll just wait for that data release to happen. Some of the things I want to look at on the daily chart here. So we got a nice clean chart on this one. I'll show you another 15-minute chart that has some additional things marked off. But we're just looking at the daily chart today right now, and we're looking at today's price action. Again, we had an early move down, and then from there we just kind of face ripped and rallied all day. But, some important things to note. During market hours, we did not take the equal highs. Okay, so on Monday, we are looking for accumulation. It wasn't exactly what I expected. Again, it just kind of price moved up. So, not sure that looked like a real clean accumulation. It wasn't necessarily a, much consolidation in there at all. And so unclear whether or not that's accumulation for a further move to the upside, or whether shorts were starting to accumulate and get in for a move that's going to take us in the downward direction. Tuesday we're certainly looking for manipulation. And so I want to point out a couple different things that could look like. And I'll show you on a lower time frame chart, because it may not be as obvious if the manipulation goes to the downside, what that's going to look like. But I'll show you quickly what the upside move could potentially be if the manipulation comes to the upside. Right? Say CPI, we open up, maybe we gap up, which looks like that might happen. That could be the manipulation, where then it starts to push us down and we get continuation on Wednesday, and then potentially even into Thursday, which could see us coming back down, to the 210, to the 206 range, maybe even lower than that, right? We could certainly just go lower if all the data comes out bad. So first thing I'm looking for is to see if we gap above these equal highs. This whole area right here, we've seen sellers over here. We've seen sellers on both of these days. We saw selling step in again, all inside this range, right? So we do know sellers are lurking here. We do know that there's orders there. There's, down wicks here. We know there's liquidity built up. We know there's liquidity built up in this wick as well, right? So there's a potential that we just gap that level, right? And then we could sell down from there. So that's one move of manipulation I'm looking for. Okay, when I show you on the lower time frame chart, we could also get a manipulation to the downside and then a further distribution to the upside. The fact that we have two back-to-back data days, we could potentially have one full day be a fake out, and then the next day be like a second fake out, and then see the move come Thursday. So those are things we'll be watching for sure. But mostly on the daily chart, I want to show you guys that we did not break the equal highs. We came very close. So, I'm sure that's by design, right? To make it look like we're going to take those highs, and then we didn't. So we'll see where price opens up. But our low target here is very, very far down here. It's all the way back at 211. So we'd have to basically give up all of today's gains in order to take that first previous day low, first kind of liquidity target. And then from there, we have the volume imbalance, which we've already traded into and hit by a wick. So I would say that is no longer of significant importance, but it is there. Okay, we have our previous day low. And then to the upside, we have our red lines here. which our red lines is a weekly fair value gap. So we're starting, we're inside of that. We're starting to draw on that. So, also we could still see a continuation to the downside later on as we start to trend up into this liquidity that's in this weekly fair value gap. Okay. And that could take us, who knows, all the way through December, right? We could just kind of trade up, come back down, trade up, come back down. We draw on liquidity that's in this massive weekly fair value gap. Okay. And then eventually catch a distribution to the downside later. So we'll be watching that as well. But right now on the daily chart, we're just inside of that liquidity of that weekly fair value gap. Also have labeled off this low from back in September. If we are still in an Elliott wave move that is going to take us to the downside, I don't want to see 234.80 broken. That might invalidate the count that I have going on. And so we'll see. We could go all the way up kind of to that point and then continue to see a sell-off from there. But if that breaks, it will be pretty bullish at that point. I'll be looking to target the 250, the volume node point of control at 253.88, potentially even higher targets than that, 268.59 being the equal highs, relative equal highs here with these two wicks. And so those are our upside targets. Now, the only other chart I'm going to show you guys is the 15-minute chart, just so we can see a better look at what went on today. Okay, our purple boxes here, I have 4 different ones. They're consolidation ranges that I'm paying special attention to. Okay, so early on in the day, I took a couple puts. They were just quick scalps. Didn't stay in them too long. Had some nice little turnarounds. But why I did that was because we were, trading down. We were breaking out of this consolidation range. So wasn't quite ready for that face ripper that happened, but took those trades in these candles and caught a couple little moves. Did not play the upside. Wish I would have. That would have been awesome. I know some traders who did, and they did well. You could look at the 15-minute candle, even though you have a wick here. If you were looking at candle bodies, you have a second 15-minute candle of the day, broke the candle body open here. Right, and after that point, we broke the range, the 15-minute open range on the wick. So either one of those indicator that you could have gone long in those. Then we start to set some fair value gaps. There's a fair value gap between this candle, the second 15-minute candle of the day, and the fourth 15-minute candle of the day. Fair value gap there. We never even tried to trade back down to it. Continued, set another fair value gap here. So all those bullish fair value gaps on the 15-minute chart, those are indicators that you could be going long, and then eventually we're going to get a return to it. So price, where did price go from that point? It went right back up into that next consolidation range that we talked about. And at that point, we just kind of consolidated within that range. Okay, that range is important to me because we saw some consolidation back here in the middle of October that happened before we saw a nice drop. Okay, we also have come back into it, tested it, rejected, tested it again, rejected even harder, tested it again, rejected, tested it again, rejected even harder straight through this consolidation range, even though there was some minor consolidation, and then back down into this range of consolidation. Okay, so now we're back up here. We're in that same range where we've seen a lot of sellers present. So there is the opportunity that we, again, reject from there. We have our fair value gap here on the 15-minute chart. We know that price gets drawn into fair value gaps after it goes in the opposite direction. But that doesn't mean we stop here. Again, if CPI comes out good, could see the run up into this consolidation range. And that comes back from August, where we saw some consolidation in there as well. And then we saw it act as support with this bottom in the end of September. And so that is also going to be the next range up that we could see price run into. That also supports the volume imbalance that we have. That also supports taking the equal highs. That also supports being inside of the monthly or the weekly fair value gap as well, drawing on liquidity. Also have some different trend lines going. We have found resistance on this trend line so far. Right here, we resisted it. Okay, we tried to get there today. We resisted it again. Unless we gap it, we might find that it offers resistance again during tomorrow's session. Okay, we also have this support trend line that's heading up. It's kind of forming a wedge. We have another resistance trend that is forming a wedge here. So we could see again, if we saw price break this resistance line and head up into this consolidation range, we have our resistance from our developing wedge that could see price come up here. And I'll use the path tool to show you guys. But say we gap up and CPI is good and the market reacts positively, could see us come up here, consolidate a little bit, then I would expect us to come back down into this range at some point in time if we ultimately want to head even higher. Okay, so it could look something like that, not perfectly, but we kind of go from range to range, you can see right now. So we're looking at different consolidation ranges to act as support or resistance. So if we go up to that next one, looking for price to come back down and test this range one more time, see if it wants to act as support before it rallies higher. Now, as long as we're in this wedge could expand and then it becomes a channel, and that's great if it does. We'll just be playing it accordingly. Okay, so that's again a kind of a bullish case scenario is bringing us back up into the 230 to 235 range. Again, I don't want to see that 234.48 broken for a bear case scenario to continue to play out. If it breaks, it's definitely a little bit more on the bull case scenario. Okay, and again, tomorrow, if we see whether we see a gap up or not, if the manipulation is to the upside, just to steal the stops here, right? Then we could see Wednesday sell off, even Tuesday sell off. There's lots of opportunity to manipulate during these data drops. So there's also the potential that we see this move, we see a sell off, okay, and then we come the next data drop, we see another move up where we think, oh yeah, we're selling off, maybe we're going to come back down and test there. Nope. And then the next day data drops again and it rips us back in the other direction. So we've got to be careful with these multiple days of data because again, there's lots of opportunities for the market to be manipulated. And because that happens during pre-market instead of during market hours, there's not a whole lot you can do if you're swinging positions. So I'm really trying to can't stress it enough. Be careful with your swings. If they're weeklies, I'd be really cautious. If you do want to swing, buy yourself a little bit of time. Time is on your side when it comes to options trading. So again, 15-minute chart range. Heading up, we're looking at this consolidation range. Heading down, we're looking back into this consolidation range. So 230, 215 respectively. And we got, our wedge lines basically in line with both of those as well. And then if we saw a further drop, it'd be a breakdown of the wedge. It'd be down into this range, and then this support line, and then this support line down here. And I don't anticipate that's going to happen this week. Might not even happen over the next month or so, just because we are seasonality. We are in a bullish time of the year. Seems like the market wants to rally. Last thing I'll do is I'll pop into the daily chart and show you guys the RSI on Tesla. Okay, we're approaching the middle level. If we were going to reject, somewhere around here would be the perfect time to do so. Come back down, run a test, maybe on this level down here at the 202. Although we kind of caught a similar area. A lot of people are talking about an inverted head and shoulders. Not sure if that's going to play out or not. We'll see. We're kind of back up at the neckline. But if we were going to reverse back up here at the 50 RSI, would be a pretty, opportune time to do it and then come back down and run a test on the lows. But also lots of room for this to run on the daily chart. Right? Even if we did run a test and we didn't take the lows, maybe we just ran a test on this low here. Okay, we definitely could still see further upside. So at this point in time, the upside is more in your favor than the downside. We've had a lot of selling from earnings, previous CPI, rate hikes, all kinds of stuff like that. And so again, we got a lot of room. We haven't tested a high for a while on the RSI, way back in June, and then setting a high in July. And so it wouldn't be out of the question to see this RSI start to push up, see price drive up from there. It looks a lot like a 1, 2, right? 3, but is it going to be a 1, 2, 3, 4, 5 that's going to drive us back up higher, or is it just going to be a 1, 2, 3 which might push us a little bit higher, and that's a corrective wave that would then bring us lower. So things that we're watching for, just want to notice that there is lots of room for this thing to run because we were at lows. Let's also just slap up the moving averages on the daily chart just to show that we're above the 20 period, we're above the 200 period, we're below the 50 period. Okay, so also something that could tell us, because we also haven't had the 20 period curl up yet on the daily, what that could tell us is that we're going to push a little bit higher. We're going to see that 20 period curl up, right? And then maybe come back down and test that 20 period and then tear through and having the 20 period cross the 50 period. So let's look at that also on a 4-hour time frame, see where we're at. We got the 4-hour 20 period curling back up, right? So that certainly could support a move up to the 200 period, which is in the 248 range. And what was that on the daily chart? We had the 50 in the 240 range. So a little bit of, confluence in our two different time period, higher time frames with the moving averages that could potentially land us in the 240, up to 245. We also know that volume node putting controls up there in the 250s. So lots of reason for Tesla to move up. But the fact that we're above the 200 period, above the 20 period, is starting to look good for the bull case scenario. So we might want to start considering, if we're in puts, to start to close out those positions if you're in profit, or start to really seriously look at the bull case scenario, at least over the next month or two. So hopefully this has been helpful for you guys. If you like my content, don't forget to smash a like, subscribe, share with all your friends. Our subs are growing by the day. And just a quick reminder that we do have a merchandise giveaway that's going on once we hit 500 subscribers, 1,000 subscribers, and 5,000 subscribers. So some lucky subscribers will get an opportunity to get a shirt, a hoodie, and a blanket once we hit those marks with our subscribers. So again, thank you guys for all the support. I'll see you guys on the next one.